Hello and welcome into my third session of the trading video journal. Today we're gonna start with Bitcoin chart on a daily and we're gonna look for setups. Now today I woke up and I did my analysis and I'm bullish. Let me explain why. So we had this period of the past about 11 days where we peaked and then we had 7 consecutive down days. But in those 7 days, we moved down only about 5% or so. And we corrected since then pretty much to the same level where we started. So I would say that this down movement was more to create an illusion of down movement in order to trick the traders to short sell here into the positions of long accumulations of the smart money. Now, if we're going down to the 1 hour chart, we can clearly see all this period of accumulation. Now, if we were destined to go down, we would be already going down. Why? Because we created this high, we took out several times the previous high. This was the high, it was taken out. This was the high, it was taken out. Usually this is the sign of imminent downturn, which we had, but it was not as deep as one would expect. So anyone who was not shorting here were waiting for some sort of confirmation, for example breaking the previous lows. So we broke those lows. Now traders are starting to get into their short positions and they were taken out. Now we had another break of the market structure, again going below the lows here and below lows here, only to return back into the range. So short sellers were repeatedly fooled in this range, and their stops have been taken out. So it signals to me that this whole area is an accumulation area of longs. Now what do we have above us? Let's move back down to the 1 day chart. We have above us the fair value gap between this candle and the previous high that was created about 11 days ago. What I'm expecting in the following days is that we're gonna close this gap. Surely not in one candle, not in one move, but rather gradually. But if we are breaching this established high, then I'm expecting that this fair value gap will be eventually closed. Now what else do we have right above us? Right above us, if we're gonna move back to the 1 hour chart, and let's hide this 15-minute fair value gap, we have this gap to close between this candle low and this candle high. Now we tapped slightly into it, but for my taste it's not enough. So what I'm expecting to happen is some gradual move up, slowly taking out the short sellers. Anyone who is selling short here is placing their stop loss above. So I expect them to be taken out, then move down, taken out, then move down, something like that, something like this, until we completely close the gap. Next, I would expect the market to correct back down to close this gap or this gap. Let's hide this whole period, and if we're gonna close this fair value gap, I will be looking for shorts here, and my target will be here at the bottom. before this rise began, because I would like to see this gap and this gap closing, and I would like to see also a retest of the order block before this rise began. So we have the order block on 1 hour chart. This black candle and this black candle, down moving candles, they created an order block before an expansion higher. So this is the more precise area, and the more general area is on a 4 hour chart, this massive order block. Now I know that it's not really an order block by all rules, rather this candle would be an order block. But nevertheless, I'm expecting kind of this general area to be revisited again, perhaps after we close this gap. So these are my trade setups for today. I'm expecting a move up, move down to revisit this area, to close the gaps and revisit and bounce again from the order block, where I would be looking for long setups to eventually breach this high and perhaps moving much higher. Moving much higher to close this gap. So these are my setups for today. I am going to keep recording this screen and let's see how it goes. After seeing the change in market structure, low, high, higher low, higher high, higher low, higher high, I decided to close this trade manually and not to wait until my take profit level is going to be hit. I will keep recording to see how it progresses, but yeah, I just made a decision once I've seen change in market structure from bearish to a beginning of bullish. let's review our third session. So what happened here? The price indeed arrived to this area of previous high, breached it slightly, then consolidated and moved down. Now if we look further, it moved down to the approximate area where I was expecting it to be. It moved even lower to take out all these lows, and then the price moved higher, also as expected, to breach this previous high and the high above it, this high. The price indeed moved higher. So let's begin with what I did right. So first of all, the trade setup for the particular short was identified correctly. Now I'm using the two key elements for the setup. One, I'm waiting for a particular level to be reached, something like this high or this high, and I'm waiting for the price to breach it, to consolidate and to move down. So the first element is this kind of reversal has to be expected only at key price level, something like this. So number one is check. Number two, I'm looking for a particular reversal model, which we can draw as follows. The price goes up, reaches the level, goes down, then breaches the level, this level, then goes down and breaches this level, and goes up and then down. Now once this level is breached, we are expecting this level to be breached. Once this one is breached, we are expecting a fair value gap in this area to be closed, and this is the place where we want to enter our short in this particular case. So this exact setup played out here. Once we established the first high and the first low, then I was waiting for the price to go move up, breach out this high, so it breached this red line, then it moved down and breached this previous low, like here. Then on 5-minute chart, here the fair value gap formed, and this was exact point of entry. As you can see, I entered my trade exactly here on this candle. Now the price consolidated. It took longer than I expected, but eventually, as per model, the price went lower, lower down. So the trade setup was identified very well. Correctly identified the trade setup and entry. Now, what else did I identify correctly? From the beginning of the video, I identified this level to be reached eventually. Here I wrote TP in this area, and generally I was expecting a reversal in this sort of block area. So the take profit level was identified correctly. But the problem was that I didn't really follow through on my original trade idea, take profit level. Okay, and now let's talk about what I did wrong. So once the price arrived here, it breached this level, it started to consolidate and to create a bullish market structure, or at least as I identified it to be a bullish market structure. Low, high, higher low, higher high, higher low, higher high. So I decided to exit the position here early. Now, of course, it was a mistake for two reasons. One, a market structure change in the middle of nowhere. There is no significant level here. Basically means nothing. If this particular market structure change would appear at some key level, for example, in this area as I identified before, or as I identified the trade setup next to a key level, then it is meaningful. We are expecting it to play out. But when such market structure change happens in the middle of nowhere, it's just a complex pullback. It's not indeed a reversal. So that was my main mistake of relying on it as a signal of price reversal. So market structure change, not in a key, not at a key level, is not a reliable trend reversal signal. And of course, the second part of this particular mistake of exiting early was just lack of patience or not trusting my own plan, because the original plan was enter here and exit here, TP. So all I had to do was to wait. So impatience and not trusting my own plan. The next mistake was wrongly identifying the levels of reversal in this area. So I was expecting to take a long from this area. Now, of course, it took longer to arrive here. It didn't happen on the same day. It arrived here only after 1.5 days. But I was apparently looking wrongly in these particular levels. So we established a low, a high, and then we would be we would need to breach this low and then this high to establish a reversal pattern. But I draw it wrongly. Now I can see it. So once we reversed and consolidated here, yes, we breached the high, but we still didn't breach this particular low and reversed back into the range. It only happened later, and I was not looking for this particular reversal already here. I was looking for the red line here. And once both this low and this low got breached, I got confused here. But apparently, now I can see it's basically the same pattern. low established, high established, ranged, high breached, low breached, back into the range, and then the price reversed back to close this particular gap here. This would be our perfect long entry. And then the price continued higher and higher and higher, as expected originally. Upon second trade entry, wrongly treated the reversal pattern and subsequently missed a long trade entry. So now let's summarize what else did I learn during this long session. So first of all, once I'm making creating a trading plan and trading setup on 1 hourly chart, and so I had the short and then I had the long idea, I have to take into account that it will take longer to play out, longer than 1 day, longer than 1 trading session. So in this particular case, the long setup I could still be in a trade a week after. So once I'm making a plan on 1 hourly time frame, I should expect maybe it should be a weekly plan, and I should expect the first trade to trade for the next 1 or 2 days, and the next trade entry to be in 2 or 3 days. So my plan is taking longer time to play out. So plan the time accordingly. And the next thing is my own emotional response. So the plan was actually correct. It played out exactly, but once I entered the trade, then some emotional response or emotional interpretation of the chart kicked in, and I started to make a bunch of mistakes. So once I am in a trade, I should stick to my original plan. And take into account that emotional decision making could be simply wrong. Now the next thing is a difference between Bitcoin USD pair and Bitcoin USDT pair. I'm doing my analysis on Bitcoin USD here. When we are comparing USD and USDT pair, we can see that this break of market structure didn't happen on USDT. So the two are not trading the same, and I would argue that BTC USD is more accurate to make a plan and to trade off of. Even if I'm trading BTC USDT, if I would be waiting on this chart for the market structure, it couldn't happen, so I would miss this trading entry. So plan on BTC USD, but trade on BTC USDT. The next thing that I learned after it already happened is the ICT principle of accumulation, manipulation, and then move and distribution. So what does it mean? Well, ICT suggests to use the beginning of sessions for example, New York session starts here. If we are expecting the price overall to go down, as I did, then we can expect for the beginning of New York session for the price to go first up to create a manipulation, or as he calls it, a Judas swing, and only then to proceed down. So if I am already identified the market structure change, the fair value gap, the price returning back here, then this principle can be used as confluence to my overall trade idea. Now I learned that only later during the week, but now I see that it played out perfectly here. Use the beginning of sessions or manipulation, identification. Additionally, during this same week, I learned about this general Wyckoff distribution or Wyckoff accumulation, or basically they can be referred to as Wyckoff price reversal patterns, which can play out in different roles. I was expecting one particular one, and it indeed played out. This up, down, breaching up, breaching down, return to fair value gap, and down. But there could be other scenarios very similar. Could be, for example, instead of 1, 2 up, it could be 1, 2, 3 up, then down, breaching all, then return into the fair value gap, and then lower. Slightly different structure, but all the same, I should expect once the price arrived to my key level where I expect the reversal to play out, then I should monitor different scenarios of this reversal. What matters is that once I recognize this kind of manipulation up, manipulation down, well, these are the first signs of price reversal, and they also can take a longer time to play out, as I can see here in this particular move in the evening, in the end of New York session. So this whole thing took us half of London session and then all of the New York session. This move up was still of this part of this Wyckoff distribution and price reversal pattern. It still came back to close some of these gaps, maybe on lower time frames. So even the entry here with a stop loss above would be a valid entry, and it's just a reminder that once the price started to move down, I should not move my stop loss neither to entry nor lower. Perhaps to take profit 1 somewhere in this region, and to keep my stop loss at its place above, because the price can go back up exactly for that purpose, to take out the stop losses before it continues lower. So upon reaching key levels, I should expect different Wyckoff price reversal scenarios to play out. So, to conclude the summary, as I can see, these boxes of the right, the wrong, and the learn are in a very precise proportion to each other. Yeah, there's still a few things that I do right, yeah, but indeed they are right. There are more things that I do wrong, and it's very good to recognize them, and there are even more things that I'm just learning along the way. As with each setup, there is a plethora of things that are happening on the chart and in my studies, in my own processing of how it plays out and how I'm acting. So I'll continue, I guess, to record these videos and to simply learn from what is happening here. Okay, thank you for watching, and I'll see you on the next session. Bye bye.